What's up, everybody? So I'm finally back with a new lecture after a long time. I wasn't uploading any new lectures because I have already explained most of my trading strategies, most of the ICT trading strategies. But today, this lecture is special because in today's lecture, I'm going to explain an indicator, okay? I will teach you guys how you can use this indicator called KC30. So we will use this indicator and we will apply some of the ICT concepts. I have been using this strategy for about 10 to 15 days. I have back tested this also, and the results are very amazing, okay? So in this lecture, I will explain how this strategy works. I took a trade on this strategy yesterday at this area. Today, I took a trade in this area, and now I'm into my longs in gold at this area. So I will explain how I took these two trades and why I'm expecting a pump from this area. Okay, so in this strategy, you can use any time frame. You can use 1 minute, you can use 5 minutes, you can use 10 minutes, 15 minutes. But personally, my favorite time frames are 30 minutes and the 1 hour time frame. But you can use every time frame, okay? And I will also show you the pairs on which you can use this strategy or this indicator. I will show you that at the end of this lecture. So how this strategy works. So first, what you have to do is you have to put this indicator on this chart, which is called KC30, okay? And you have to make some small changes to it. You have to increase the length from 20 to 30, and you should increase this from 2 to 3, okay? Also, you will untick this one, and you can remove this basis, okay? And also remove the background, or you can apply it if you want. Okay, so how I took my trade at this area. What was the reason that I took a trade here? So in this strategy, what you have to do is you have to wait for a candle to touch either the highs or the lows. In this case, this is a bullish case. So we will explain this one. So why I took this trade. So you can see, as I said, the first thing is you have to wait for these candles to touch this indicator, okay? And here you can see this candle touch this area. Okay, so this was the first condition, and our first condition is met, okay? The price has touched this indicator. Now, what will be the next step? The next step will be an up closing candle. As you can see, this is a green candle and an up closing candle. It can come down below this previous candle, but it should close above this indicator. As you can see, it has closed above this indicator and above this previous candle. Closing above the previous candle is not necessary, but it should close above this indicator. And this candle can be either a bearish candle or a bullish candle, but it has to touch this indicator, as you can see here. So what was the first condition? This candle should touch this indicator, and it has been met. Now, the second condition is that we have to get a bullish candle or an up closing candle, and you can see this is a green candle. Now, these are the first two conditions. What will be the third step? The third step will be a down closing candle, a bearish candle, and you can see that this candle, this third candle, is a bearish candle, and the price has come down. Now, these are the first three conditions. When you see these three conditions, you have to draw a line here, okay, on top of this down closing candle. Okay, you will draw a line here, as you can see. Now, what we will do, you have to drawing this line, you have to wait for the price to go above this candle, okay, just wick above this previous candle. When the price just wicks above this previous candle, you have to get an entry, either in market or you can enter through buy stops, okay? So you will enter here and you will target the highs. But what will be your target? So let me show you. Where can I find that long pattern? Okay, and here. So I will select this long position. Once the price goes above this candle, this will be your entry point, okay? And your stop loss will be below this swing low, and you will target 2 RR, okay? Now where you can find the RR, you can see here. This is the risk to reward ratio. So you will enter at this point and your target will be this area. At this point, you will have to take the profits, okay? I will explain the risk management later, but let me show you this bearish example now. And then I will explain how you can manage your risk. In this case, this is a bearish case. So you can see that the first condition is met. This candle has touched this indicator. Now, in this case, we were looking for a bullish candle. And in this case, we will look for a bearish candle. And you can see we got this bearish candle, okay? First we got this one, then we got a bearish candle. Now, after this, what is the third condition? A bullish candle, and it should go above. In this case, we were looking for a bearish candle. And here you can see we are looking for a bullish candle, and this candle has closed above. Now, what we will do is we will wait for the price to go below this candle, okay? This bullish candle. And once the price wicks below this area, you will take your entry, okay? This is where you will take your entry. In this case, you will take a short position. This will be your entry point, or stop loss will be above the swing high. And again, we will target 2RR. So let's see where is, okay. So this is your 2RR trade. You can see 1.99. So this was the entry that I took yesterday. Today, I took this entry, and now I am into my longs, as I said earlier in this lecture. So I will explain why I am into my longs at this point. Here you can see that this candle touched this indicator, okay, the first condition. Then the second condition was an up closing candle. You can see this is an up closing candle. Now here you can see another up closing candle. So you can get that, okay? You don't have to worry about a second bullish candle. Either it will be one bullish candle or two bullish candles, okay? You don't have to worry about this. After these candles, you have to look for a bearish candle, and you can see this is your bearish candle. But you can see after this bearish candle, you got another bearish candle. So in case of a single bearish candle, we would have waited for the price to go above this area, and then we would have taken our entry. But here you can see that we have got two bearish candles. So in this case, this will be our area, okay? Once the price goes above this area, the price wicks above this area, this is where you will take your entry, okay? In this case, long entry, once the price goes above here. And in this case, the stop loss is a bit wide. And again, you will target 2RR, okay? So in this case, 2RR will be around here, okay? So this will be your 2RR. So let's see if this trade works for me. The daily is about to close in around 1.54. So I will close this trade before that. I won't wait for Monday. I will not wait for Monday, and I will close this trade once it's in profit. Okay. I will close it before the daily close. So what will be your risk management? So in risk management, what you can do is you can risk 0.5% or 0.3% of your account. Okay. If you are a funded trader, you can risk around 0.3% or 0.5% per trade. And what you can do is you should take partial profits when it pumps around 1RR. Like if the price pumps to this area, you can take partial profits around half, and then for the other half, you can wait for 2RR. And once you take profits at 1RR, you can shift your stop loss to break even to your entry point. Okay. In this case, you can see the price is pumping. So you can take half of the profits at 1RR and then shift your stop loss to entry. And then for the rest of the trade, you can wait for 2RR, which is around this area. Okay. So this is all about this strategy. This is all about this indicator. It works really good so far. So you can try it. Also, you can see we have used some ICT concepts here in this indicator. So these concepts make the win rate even more, and the win rate is around 65 to 70%. Okay, so sometimes it will give you losses. Okay, you can see price is already going up, and now I will show you some pairs that you can use this strategy on. If you have any questions, you can ask me in the comments. Thank you guys.